Hello and welcome. You're watching Global Lens. I'm Parikshit Luthra. Straight to the market action. Asian indices closed mostly higher, shrugging off concerns over US President Donald Trump's 100% tariff threats on semiconductors imports. Japan's Nikkei, South Korea's Kospi, Hong Kong's Hang Seng and Chinese markets posted gains of up to 1%. Back home, Nifty and Sensex staged a dramatic last-hour recovery after plunging to a 3-month low. Wall Street and European stocks also edged higher. US President Donald Trump's tariffs on imported goods from more than 90 countries take effect from today. In a social media post, President Trump claimed the hike in tariffs are already paying off, with billions of dollars now flowing into the United States. India is facing a 25% tariff rate. This will double to 50% from the 27th of August as President Trump penalizes India for importing oil from Russia. India has strongly pushed back, calling the tariffs unfair and unjustified. Sectors expected to feel the heat include textiles, leather, engineering goods, agriculture, seafood exports. However, certain sectors are exempt. This includes goods targeted under sector-specific duties such as steel and aluminium, pharmaceuticals, semiconductors. India's electronic exports are also exempt at least till the 14th of August as things stand. Brazil has also been slapped with 50% tariffs, with Trump accusing the Lula government of conducting a witch hunt of his old ally, former President Bolsonaro. South Africa, yet another BRICS partner, has been hit with tariffs of 30%. China has been hit with the same rate after it agreed to ease exports of rare earth elements to US. Trump also threatened Russia with tariffs if it doesn't agree to a ceasefire in Ukraine. For Switzerland, the 39% tariff came as a shock as the economy is heavily reliant on exports. Myanmar, Canada, Iraq are also among the countries worst hit by tariffs. In Southeast Asia, Vietnam faces a 20% tariff. Malaysia, Indonesia and the Philippines all have been slapped with a 19% tariff. The EU, Japan, South Korea, among a handful of nations that clinched a deal with the US, they have been hit by 15% tariff each. The UK negotiated a 10% rate. Trump has also turned tariffs into a diplomatic weapon, often announcing major trade decisions via Truth Social rather than through formal channels. Countries like Vietnam, Brazil, South Africa, Canada and Japan were blindsided by sudden tariff hikes, many based on political or ideological motives rather than trade imbalances. Trump also exaggerating India's trade barriers and falsely claiming to broker peace with Pakistan. Experts say Trump's tariff tactics are meant to pressurize countries into last-minute deals that he can brand as victories. Joining us now to take this discussion forward is Brian Coulton, Chief Economist at Fitch. Brian, thank you very much for joining us. Your view now, these tariffs come into effect from today. What's going to be the impact on the global economy? Your latest outlook?
We basically think that this is going to lead to a significant slowdown in global growth over the next year or two, a shock to maybe 1% of global GDP. That's $1 trillion loss in global income as a result of these trade barriers.
Right. Now, about the US itself, how does this really change the image of United States as a place to do business, considering the effective tariff rate against the world in the United States is going up to 17% from 2% last year?
Well, it's obviously massively complicated. Everybody's trading relationship with the US. These barriers are enormous. It's not just the tariff rates themselves, which are huge, highest levels we've seen since the early 1930s. It's also the complexity. You know, every country's got a different tariff rate. I mean, just how they're going to administer this. It's adding massive amounts of bureaucracy to trade as well. But what the US continues to have an advantage, it's an absolutely massive market. The US consumer is the most important market in the world, and that will continue to be the case. And so the rest of the world is just going to have to kind of take it on the chin. But, you don't really have any alternative but to sell stuff to the US, given its position in global markets. But it's going to be a lot more complicated and a lot more costly to do so going forward.
Right. Do you think the US economy is going to benefit from these high tariffs? And what could be the fallout in the coming few months?
No, we don't think the US economy is going to benefit. Quite the contrary. In the near term, we're now forecasting quite a significant slowdown in US economic growth. We've got growth of 1.5% this year and next year. And that comes off the back of an economy that's been performing really, really well over the last 2 or 3 years, growing 2.5%, 3%. So that's not a recession that we're expecting, but it is a pretty significant slowdown. And that's because we think the uncertainty is weighing on business investment. We're already seeing evidence that the consumer is slowing down. We think that will be accelerated in the second half of the year as these tariff increases get passed through to higher prices. That will squeeze real wages. So short term, we see it negative, and we don't see any benefits in the long term either. This supposedly hoped for, rejuvenation of the manufacturing sector in the US economy. I think that's going to be very, very challenging. I don't think tariffs are going to unlock a major increase in the share of manufacturing in US GDP.
Right. And tariffs, once imposed, are always hard to bring down because they bring hundreds of billions in revenue. If these level of tariffs were now to stay, what can happen in the long term in terms of US trading relationships and the impact to the US economy?
You're absolutely right, and we are seeing these higher duties now being collected by the US government, but that's partly expected to be recycled back into the economy next year to fund tax cuts. So, once you've done that, then you do become reliant on that tariff revenue continuing. I do see these tariff rates staying where they are. I think what's happened in the last week or two has kind of, finally put paid to any notion that all these tariff increases were just about a negotiation tactic to achieve other policy goals. That just clearly does not seem to be the case now. This is all about import substitution. The US administration trying to turn the US economy into a producer-driven economy, trying to switch US consumption away from imports and towards domestic production. If that's the goal, then and tariffs are seen as the tool in which to achieve that goal, it's pretty clear that these barriers are here to stay. So I think that trend of globalization that we saw all the way up until about 2015. Since then, it's kind of been steady in terms of the share of global exports of goods and services as a share of global GDP. I think there's got to be a very good chance that starts to reverse in the next 3, 4, 5 years. We'll see global trade shrink as a share of GDP again, as every economy starts to become more closed and more self-sufficient, particularly the US.
Right. I would also like to ask you about India. How do you think this tariff, 25% last week, and now an additional 25%, which comes into effect on the 27th of August, if this hit had to happen, a 50% tariff, how would this change your outlook on India?
Yeah, it's a big shock, particularly relative to the sort of earlier expectations that India would quickly come to achieving a bilateral trade deal with the US. If you think back to the debate back in March and April, that was very much the consensus that there would be a US-India trade deal would be quite easy to achieve, and India had kind of access to a huge domestic market as a carrot for the US, and the US was looking really had something to gain, and therefore India would have leverage. Well, hasn't panned out that way, so it's obviously a big disappointment. And these are quite significant numbers. India exports $88 billion of exports to the US, so a 50% tariff rate on that, even allowing for the carve-outs, is a big number, but it's probably a manageable shock, I would say. So if you look at the increase in the tariff rate, if you assume that the mix of India's exports to the US stays the same and the volume stays the same, we're talking about an extra hit of 0.7% of Indian GDP. So it's a big number. It's not clear that would all be borne by the Indian economy, but it's a big number. If it's 25%, it's 0.4%. If it's 50%, it's 0.7% GDP. That's a decent sized figure, but it's kind of manageable. I don't think it's going to push the Indian economy into a deep slowdown, but I do think it's going to have a negative impact on confidence. And the upside that people were talking about in India from gaining market share from, say, China in the electronics markets, that upside has definitely gone. So I think the sentiment impacts could actually be quite significant.
Right. Finally, the crude oil bill. How do you think India's crude oil bill is likely to spike? Because our energy imports, our oil imports from the US are going to spike 150% as per sources in the government.
Yeah, I mean, obviously, if you go back to 2022, 23, 24, what was going on was that there was this huge discount between the oil price charged by Russia to Indian importers, a big surge in Indian imports of crude oil to a peak of about 2 million barrels a day, I think, from Russia. And for those early years, 22, 23, 24, there was a really sizable discount on the global price, and so that was saving India a lot of money. But that discount has got much smaller in the last couple of years. So again, it's the number, we're talking billions of dollars, but it's not something I think is going to have a massive impact. I think maybe the bigger risk for India may be Trump's efforts to sort of stop other countries buying Russian oil. If he's successful in managing to limit the supplies of Russian oil to the market, that could be a broader upside pressure on global oil prices. Because one of the interesting developments since the Russia-Ukraine war is that Russian oil did not leave the market. It just got redirected, and that prevented oil prices from rising faster. But if oil prices go up, India is one of the most vulnerable economies to an oil price hike. Net oil imports are 4.5% of GDP, so it's very exposed to an increase in global oil prices. So I think that might be more of a risk than the direct effect of losing this discount by switching from Russian to US oil imports.
Right. Thank you so much, Brian Coulton, for joining us on the program. Let's move on. In all this tariff chaos, the question remains, which direction is the India-US relationship heading? Many experts have repeatedly warned India against any retaliatory measures as they fear this would hurt the relationship further. There is another set of experts making a case that India-US story is still strong, and that stems from strong people-to-people ties. As per Indiaspora, over 5 million Indian Americans contribute meaningfully to the US economy, serving as a living bridge between the world's two largest democracies. But this people-to-people ties don't end there. Close to 3 lakh Indian communities contribute over $8 billion annually to the US economy, creating direct and indirect jobs in the US. In the last 2 decades, leaders on both sides have ensured that they bolster ties across different areas. And Trump was one of them in his first tenure, when he even made it a point to visit India. Coming back to his second tenure, Prime Minister Modi made it a point to visit Trump within weeks after he took over office as the president. And during that visit, both nations launched a decade-long strategy to deepen ties. During that visit, the leaders launched new initiatives, the US-India Compact, which means catalyzing opportunities for military partnership, accelerating commerce and technology for the 21st century. Both sides were even set to sign a new 10-year framework for a major defense partnership. Also unveiling a new bilateral trade goal, Mission 500, aiming to more than double total bilateral trade to $500 billion by 2030. But in all this trade war, it needs to be seen what happens to this trade target. Also, the negotiations on the reciprocal defense procurement agreement, which are set to open in 2025, may be clouded by trade talks too. Let's go across to Sanjeev Joshipura, who is from Indiaspora, the executive director of Indiaspora, joining us. Sanjeev, thank you for being with us. As a prominent member and as a face of the Indian diaspora in the US, how concerned are you by the current relations?
Thank you for having me, Parikshit. It is definitely, as we said in our statement, a temporary setback. There's no question that relations are a little bit more tense now than they have been in the recent past. But our perspective at Indiaspora is that the relationship between the two countries is very broad-based across a variety of different realms and sectors. It is also economically and strategically an important partnership for both countries as we move forward. And past experience would suggest, at least over the last 15 or 20 years, that even if there have been temporary setbacks, that the overall trajectory, as befits the aspirations of the people of both the nations, is on an upward swing. And we are optimistic that that will continue in the future, notwithstanding the temporary setback. We also believe that continuing negotiations between the two countries will ultimately fructify in a mutually satisfactory result.
Right. What do you think is holding back the two nations from reaching a deal? India has drawn its red lines. As a member of the Indian diaspora, somebody who lives and works and has literally grown up in the US, what would be your expectation from India?
It's not for me. There are trade negotiating experts on both sides, the American side and the Indian side, who know what their red lines are. They are obviously aware of the sectoral impacts of the tariffs. As much as this is an economic question, it is also obviously a political question. It's a question of political economy on both sides. Far be it from me to advise the governmental leaders as to, what sectors they should or should not cut tariffs on, or what sectors they should or should not open. I think there are people that have studied that issue far more than I have to be able to comment on that knowledgeably. But the one thing I will say is that I do believe that the relationship that has been cultivated between President Trump and Prime Minister Modi over the past several years, including in the first term of Donald Trump, I believe can help reach this negotiation to a salutary conclusion from both sides. I do think that if at the leader level, at the cabinet level, if both sides were to talk and understand each other a little bit more, understand the broader geopolitical context and the strategic picture, even beyond sectoral tariffs, I think that would help reach a mutually satisfactory conclusion.
Do you believe, Sanjeev, because this is a feeling many have in India, are there people in the Trump administration, in his inner circle, who understand India well, or the importance of India-US ties in the long term? Because Trump in his second term is more determined to get the trade part of the relationship right. He's looking at it completely from a business view, but currently in the Trump cabinet, in his White House inner circle, is there someone who is a supporter of India-US relations?
President Trump ran on trade and tariffs being one of the major issues. So it doesn't come as a surprise that President Trump is indeed focusing on that. But to answer your question, Parikshit, about the understanding of India among the United States government, there are two things I'd like to point out here. One is that over successive administrations in the past 25 or so years, there has been a growing trend of a greater understanding not just of India and the nuances of India, but also of the strategic and economic importance of this relationship, the importance that the diaspora brings, the people-to-people ties between the two countries. That understanding in government across party lines in America has been growing over the past 20-25 years. There are lots of Indian American officials that are at senior levels in government. Now, having said that, I do think that a greater level of understanding about India is required not just at the bureaucratic expert level, but also at the political appointee level. That is something that I think both countries would benefit from if America had a little bit more of that at the political appointee level. There is plenty of that at the bureaucratic level. I think there are tremendous experts at the Commerce Department, at the State Department, at the Trade Representative's Office, and so on and so forth, that really study and understand and have experience with India. I do think that, some political appointees definitely have that in the Trump administration. Personally, as a preference, I would hope and I would like to see it a little bit more broad-based across the administration.
Right. Thanks very much, Sanjeev, for joining us. And one important point is that we still don't have a US ambassador to India, which would be very critical at this point in time. We have an Indian ambassador to the US, Vinay Quatra, but we don't have a US ambassador to India. Thank you very much, Sanjeev, for joining us with those very important views. We're taking a short break, but don't go anywhere. We continue our focus on India-US ties with former Assistant USTR Mark Linscott on the other side. Welcome back to Global Lens. The Trump administration has given India a 21-day window for further negotiation. Sources have said that the Indian government is working towards finding a solution, and it is aiming for a win-win deal. Let's now go across to Senior Advisor, USISPF, and former Assistant USTR, Mark Linscott. Mark Linscott, thank you very much for joining us on the program. What do you think at this stage will really clinch a deal with the Trump administration?
Thanks, Parikshit. So, what would clinch a deal? It's hard. It's hard to say. We've been predicting one for weeks now. I was certain one would take place roughly 3 or 4 weeks ago, and obviously I was wrong about that. But I think that there are two clear elements now. There is the trade deal itself, associated with the reciprocal tariffs, which is now at 25%. We've got a little bit of a roadmap for a trade deal. We've got the deals that were struck with other countries, Vietnam at 20%, Philippines and Indonesia at 19%, but we have lower rates for countries that I think are more in a position like India, and that's Japan at 15% and EU and South Korea at 15%. So, I think the two sides should be looking at that kind of model. I think it's possible. I think a lot of progress has been made to date, and they should build on that, and probably at the leader level. The second part of it now is the new complication, one we weren't anticipating 8 or 9 days ago, and that relates to purchases of Russian oil. That's in the mix now. We had the announcement of a 25% tariff yesterday. It's pretty remarkable. Additive at 50% plus MFN rate, so 50 plus percent against India. That will have to be resolved one way or another. The good news, and it's a bit ironic at this point in time to refer to good news, is that we do have a now 20-day reprieve. President Trump has announced that he's planning to meet with Putin, which is progress on that front. So there is a window of opportunity for the United States and India to get together and figure these two broad categories out. And again, I think it's going to require high diplomacy. It's going to require likely leader level engagement, some kind of communication between the two.
Right. India has been saying, Mark, that we will go and buy oil wherever we get the best prices. We're doing it with the US as well. We can increase our supplies from US, but we cannot cut off ties with Russia altogether. Will this cut ice with Donald Trump? And if he were to get some assurance from Putin, do you think he'll pull back on India?
I think it requires more than that. I think it's going to require some creative thinking and creative diplomacy on both sides between the United States and India. We did have the precedents in the first Trump administration, and then moving into the Biden administration on Iran and Venezuela. I mean, it appears that there can be the ability to shift purchases around. I don't know that there's an expectation that that India would cut off purchases overnight. That seems unrealistic. But if a plan were provided that works for India, I mean, that is the key point. It has to work for India. It has to work in terms of keeping energy prices down for Indian consumers. I believe there's got to be space for a compromise on that issue.
Right. So you mean to say US should be able to provide energy to India at competitive prices?
Well, you're venturing into territory that I'm not an expert on. I'm the trade guy, as you know well. So, I'm not in a position to give you, an expert analysis on oil prices and energy prices around the world and how they adjust with respect to each other. But I still believe that there's got to be a creative space for an understanding here that recognizes, that acknowledges India's situation, yet responds to a primary objective of the president to put the pressure on Putin in terms of striking a deal on Ukraine.
Right. Also, when it comes to this 50% tariff, this comes into effect on the 27th of August after 21 days, like you said. We begin the 6th round of trade negotiations on 25th is when the US negotiators are coming. So do you think this has been strategically timed to make sure we get some sort of agreement from India in those 2 days, 25th and 26th?
I don't think it's necessarily tied to the plan, which has been in place, in fact, been in place well before the Truth Social post by the president last Wednesday on Russian oil and his threat to impose tariffs, a penalty tariff, which he's now followed through on. I don't think that there's necessarily any connection there. The larger aspiration, the ambition of the two countries, as laid out by leaders in February, to negotiate a comprehensive bilateral trade agreement. That's a process. That's a long process of negotiation. They've only just started to try to conclude an interim agreement on tariffs and I think the priority non-tariff barriers. But they've got a lot of additional ground to cover: trade and services, intellectual property rights. There are lots of rules areas to cover. So I think the plan to have a delegation at the end of August relates specifically to the broader bilateral trade agreement. The real window, though, I think, is specifically relating to the imposition of the Russian tariffs, the tariffs associated with Russian oil. I mean, that's the key moment. That's the key trigger point. And this is roughly 3 weeks to try to get it all done.
All right. Thank you very much, Mark, for joining us. So critical time, and we're in the first day of negotiations now. Let's see what happens in the days to come. Thanks once again for being with us. On Final Cut this evening, Apple CEO Tim Cook presented a custom glass plaque to US President Donald Trump during a visit to the Oval Office. The plaque, crafted by iPhone glass supplier Corning, was a symbolic gift to mark Apple's announcement of nearly $100 billion in new US investments, bringing the company's total investment in the country to $600 billion. The plaque featured President Trump's name alongside the Apple logo and was made from glass produced in Kentucky, set in a 24-karat gold base from Utah. The design was created by a former US Marine Corps corporal who now works at Apple. That's all for today on Global Lens. Thank you for watching. Goodbye.